hungover, slightly hungover you. Slightly hungover, slightly hungover you. You shouldn't lie, baby, no, no, to someone who loves you, and I do. Morning after, morning after you. Morning after, morning after you. Morning won't last forever, and I'll be over you. And I'll be over you. And I'll be over you.
All right, everybody, how is everybody doing? Welcome to the show. If you can hear me, please type yes on the chat, right? If you can hear me, please type yes on the chat. Oh, I need to choose the screen. That is the one. Hi, Marina. Hi, Vijay. Regan, how are you? Regan, are you excited for NFP? Yeah, always. Thank you, loud and clear. Alvin, how are you, mate? How are you? Awesome, Rasman. How was your trading week? Yeah, nice music. Oh, you know, I'm an old school guy. I love the blues. Good morning, traders. That's it. So, how was your week, mate? How was your week? My week, if you're part of the VIP team, you already know that. I started the year with three losses, four losses in a row, right? Which is fine, which is fine. Um, and but now my tally for the year is minus 2R. Yesterday I traded. I put on one trade on the US dollar Mexican peso. This was the trade that I took. Well, it's not here. But this was a trade that I took, a short on the USD Mexican Peso. This was a US dollar driven trade, of course. I shorted, I'm sorry, I'm going to show you a 50-minute chart. So I went short here with my stops here, and I took profits here, right? I know that eventually, the US dollar Mexican peso hit my targets. But why did I take profits there? Well, it's quite simple, right? This was a US dollar driven trade. I am a US dollar trader. You already know that. And if you look at the DXY, the US dollar currency index, right? And if you look at this box, mates, if you look at this box, I mean, the US dollar has been trading inside of this choppy mess of a range for 7 weeks. So it hasn't been easy for US dollar traders, right? And yesterday's US dollar Mexican peso short, the rationale was quite simple. I think, yeah, this is the one. Yesterday, yep. The rationale was quite simple. It was a reversal of this level, right? And because the USD is trading inside of that choppy range, the smart thing is to take profits fast. Um, I am still looking for US dollar longs, right? And hopefully, today's non-farm payrolls are going to, to boost the USD. Let's have a look at what we're waiting for or what we're looking at. So non-farm payrolls, right? 2 months ago, the number was, I mean, this is last month's number, but you know that, I mean, this number was released in December, right? But this is November's jobs added to the economy, 210,000. It is expected that in December there were 400,000 jobs added to the economy, and it is expected that the unemployment rate will decrease by 0.10%. And this is the thing, right? I mean, if you have been with us or have been tuning in on my shows for a while, you already know that one of the analytics that I mostly look for is the average hourly earnings. Right. Why do I look at the average hourly earnings? Because, I mean, it's okay. I mean, not okay. It's very good that new jobs are added to the economy. But if the average hourly earnings decrease, that means that wages are going to decrease, and um, it's not that it doesn't matter that new jobs are added to the economy because people are not going to be able to make a living out of the wages that they are going to be paid, but it creates a um, when the data is released, it creates a bullish, bearish, momentum, and it's quite choppy. So let's wait and see what happens. Um, not financial advice, but do not front run a high impact event that is um, just setting money on fire. Right. Olympio is coming up after me for the actual new non-farm payrolls release. He will be going through the US dollar. He will be going through everything. And you should actually tune in. I am going to, I'm going to just warm you guys up. And, I wanted to share what I'm looking at on crude oil. So, Theo, hi Orlando. US dollar Mexican peso got me ahead for the week. Thanks for that. You're more than welcome, Theo. And if you notice, Theo, I haven't been trading I haven't been sending to, a lot of trades, right? And the reason is because this year I am going to be focusing on quality, right? Quality. I'm going to be focusing on just quality setups, and mostly on the USD, right? And um, when it comes to trading, I know that everybody has heard this, but that less is more, but it is actually true. It is actually true. Um, yesterday and the day before, I had about 5 to 6 setups that I could have traded, right? And one FOMO on the pound yen, of course, one FOMO on the pound yen, which obviously I wasn't going to take. But I had like 4 to 6, 5 to 6 setups, right? But I only took one. I only took one. And if if I had taken all of them, my tally for the year would be -6R right now. So yeah, less is more. Focus on high probability setups. Focus on quality, mate. Quality, right? So let's have a look at crude oil. That's why we are here. And when it comes to crude oil, my preferred market is always Brent, right? Less is definitely more. Right. So let me just delete all of this, all of this. All right. So before I start talking about what I'm going to do in Brent, I don't know if you guys have um, watched this
All right, Trader.
this video that I uploaded yesterday. You know, we developed a position size calculator, right, that is free for all VIPs, right? So if you are struggling with, you know, calculating the size of your trades, um, if you join the VIP team, you're going to get that for free. So let's talk about crude. Um, who here trades crude oil? Yeah, I want to hear that first. I want to hear that first. Who here trades crude oil? Uh, you know, um, I personally, I don't trade this market too much. But when I see opportunities like this, I mean, it's just too hard um, to pass on. And when I say that it's just too hard to pass on, it's not because I feel like the risk to reward is too great just to not trade it. No, it's because of the setup that it's building, right? And yeah, hold on just for a second. We need this at the moment because
Here comes the money.
here comes the money. Right. So what I'm looking at here is this. So let's have a look at the higher time frames. Only if you tell me to. You know, that's funny. Let's look at the higher time frames, right? This is the 2-day chart. I'm gonna go to the 4-day chart, and I am going to delete all the drawings. So this is Brent. The reason that I do like Brent instead of WTI, right? is because of this. Futures contract in Brent. Um, just give me a second. I'm looking at my chart, at my MT4 on my other screen. So futures contract in Brent are settled in cash, right? That's one of the main reasons that it didn't go negative on that terrible, terrible day, right? Um, and it's less speculative, even though moves are quite similar. Um, I feel that it's less speculative, and setups yield much better risk to reward opportunities. Fiji's in the house. Right, so what I'm looking at here is this. Let's talk about levels, right? Let's look at this high. This is September 26, 2018 highs, right? Boom. Big rejection of that level. Of course, we're going to see a rejection of the 85, 86 level, let's call it, right? On this massive rally from the lows. Now, from the lows to those highs, we have seen a 440% rally. That is massive, right? And if we look at the pullbacks on this rally, the first one was 23%, second one was 16%, third one was 17%, and the last one was the biggest, well, 23%, right? So, yeah, massive bullish market that we're seeing. And more so with the inflation rising, etc. Of course, that we are going to see higher prices in this market. Francis in the house. Didier, moi je parle français. Si tu veux poser les questions en français, you're more than welcome. Of course, I will respond in English, but yeah, moi je parle bien le français. J'espère que tu comprends ce que je veux dire. J'ai une question en fait. Est-ce que je parle bien le français ou est-ce que tu as un accent du sud, maman? Right, so we're seeing that rejection of the 86 level. Yeah, on the higher time frames, there's not too much to see, right? What I'm looking at at on this market is a higher riskier or a riskier trade in the sense that it is a reversal trade idea on a massive bullish move, right? But if you look at the 4-hour chart, um, not only price has hit a massive pivotal level, right? Historic pivotal level, but we have hit those 161.8 midterm bullish targets and retest and testing the high of the immediate bullish structure, right? You are more than welcome, Alvin, right? Yeah, the reason that I decided to just give that position size calculator for free for all VIPs is because this year one of our goals, one of our aims, right, is to make things easier for you guys, for all VIPs. Why? Because the less decisions you have to make um, on your trading, the more optimal your overall trading decisions will be. So, if you have a position size calculator and you already know that you risk between 1 and 1.5 or 1 between 1 and 2%, um, you don't have to take the decision of how much or how big you're going to get in on a possible trade. So your focus will only be on the setup. And yeah, I mean, you're more than welcome. Of course, like I always say, there is enough money in these markets for everybody to profit. So let's go back to Brent. A couple of things before we continue is this price completely um, oh, um, obliterated and broke with December highs. That is very bullish, mates. That is very, very bullish, right? Not only that, impulses to the upside are extremely, extremely volatile. If you see, we have a 15% move to the upside, and uh, after that 15% move to the upside, we have only a 4% pullback, and the last leg up is let's call it an 8% move. Zambia in the house. Right. But having said that, the last time that Brent was trading at this level, we saw this. Shall I look? The last time that Brent was trading at this level, we saw this, right? A big consolidation and then boom, a big, big, big drop, right? For about 20% or so. Now, I'm not saying that this is going to happen again at all. We also have to look at fundamentals, crude market. Let's have a look at that. John Kemp is the lead analyst for energy at Bloomberg. If you're not subscribed to his newsletter, I highly, highly recommend that. Super good. Now let's have a look at what he has to say about this market. Gas. I don't care about gas. Oil bulls return as a threat from Omicron recedes. Yeah, that's completely understandable. I just want to see stock. Yeah, I'm not gonna look at gold, mate. I'm sorry, VJ. Boom, boom, boom. U.S. petroleum inventories are well below their normal season level. Right, here it is. U.S. inventories are 79 million barrels below the 5-year seasonal average. Ah, that is bullish. That is very, very bullish. But again, I don't know if you remember that the Biden administration also is going to release a ton of crude into the market to cap prices in petroleum. Um, if we look at the higher time frames, that hasn't had a ton of effectivity, right, in actual or in current oil prices. But having said that, let's just look at technicals. And what I'm looking here is just a retest of the 80, let's call it the 83 level. And let me just do this correctly, right? Um, right here. So this is another thing. I don't know how you guys draw your channels or trend lines, but when it comes to a rising channel like this one, what you need to do is go from the first low to the second low and then just clone it to the first high, right? I've seen a ton of
An update
trade.
here from the US CDC's director.
Hold on. I've seen a ton of traders just do it from the highs on up moves and from the lows on down moves, and that is not correct. Right, but having said that, price is testing that 83 level, hitting that 161.8, which is the short-term target of this previous leg up. And yeah, retesting the top of the bullish structure. Now, let's go to the lower time frames. This is the 15-minute chart. No good. Let's go to the hourly. So on the hourly, actually, let's recreate that channel on the hourly, right? Because it is important. Clone, boom, you see, and the key level, which is no, this is not it. I'm sorry, it's this right here. Should be this. Boom. So let's go back to the hourly chart, and this is what I'm looking at, right? What I'm looking at is that really, really overextended move, right? Going short, do I run the VIP channel? Yeah. We are three traders on the VIP channel. So what I'm looking here is a very, very overextended move, hitting uh, some crucial levels, and also price printing a reversal pattern at the top. Not only that, but if you notice on the bottom of my screen, there is some massive bearish divergence. Now, these are just technicals, and going short here at market is ill-advised, and is also just burning money because why? Because the up move or the structure or the bullish structure is still very much in play. There is nothing that has validated the reversal in this market. So basically what I'm looking at here are possible shorts, and my validation level, of course, is the bottom of the reversal structure, which confluences with um, uh, this is January the 5th, so Wednesday's highs. So here I'm gonna actually use a straight line. So this is my validation level, right? Anything above this level is still very much bullish. Now, if price comes down and breaks with the the wedge lows and Wednesday's lows, then I will be more than happy to get in short. Right now, I mean, this 1 hour candle is looking very bullish. Let's just have a look at the 50-minute chart. Right, on the 50-minute chart, as you can see, as I already told you, going short at market here is super ill-advised. There is absolutely no edge on shorting crude oil or Brent in this case, case at these levels. Yeah, I know that a lot of you are always looking for that 1 to 17 risk to reward ratio. But that is just not the way that I train. I mean, yeah, sometimes I do find a 1 to 7, 1 to 5 risk to reward ratio setups, but they always have a validation level, right? Yeah, I mean, let me just show you. If you were to go short right now, at current prices with stop losses above the highs, of course. And let's say that you take profits here at these lows, you're looking at a 1 to 12 risk reward ratio. But let's be honest, right? There's absolutely nothing that validates a reversal in this market, and your stop losses are just way too close to current price, and just not protected in the sense that they are open uh, for a stop hunt, right? Uh, Maybe before that drop. Now, if we go back to the hourly chart, again, one a lot, I mean, a lot of traders would think also that the key validation level would be these lows. Why? Because if price breaks with these lows, right, the immediate bullish structure would be broken with. But what happens here, mates, is this, right? The way that I trade is just is based on key levels and on historic highs and historic lows. Why? Because I've done the backtest, right? And going short here at the break of this low is not profitable in the long term because most of the times price is just going or the market is going to find buyers here at the previous broken lows and just stop you out. So the validation that I have found on this particular setup to work long term and to print money with is a break of the actual reversal structure and the previous highs. Why? Because when price breaks with the previous highs, it's actually invalidating the current bullish structure. Why? Because the current bullish structure, or I mean, as you can see on the chart, right, price is printing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. Now, if price were to break the previous highs, right, the probability of it breaking the previous lows or at least retesting this previous base is extremely high. So this is where I'm looking to put on a sell stop. Now, let's go to the 2-hour chart. And I'm going to show you what I'm actually going to be doing, right? Now, this is not the level. This is the level. Now, the next key level in this market is this previous high. I always look for historic key levels, and the way that I find them, I'm sorry, is pretty simple. I just look where buyers and sellers have jumped into the market. In this case, uh, into the oil market. And yeah, after this sell-off, boom, this is where sellers jumped in again, right? So, and not only that, but if you notice here, this is the level that sellers were protecting. And not only that, but this is where buyers swipe, or I don't know the past tense of swipe, but swipe all the sell orders that were at this level, printing this massive bullish candle, right? And again, buyers, now this level is being protected by buyers. So the probability, now if everything that I've just told you plays out, in the sense that if sellers jumped in here, if price breaks with the reversal structure, etc., 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 and price dips towards these levels, the probability of finding buyers here is extremely high, right? So that's why I always take profit on the next key level. Not only that, but it confluences with the weekly pivot, you know, and of course it is going. Let's have a look at ratios too. Probably we will see some short term exactly right there, 161.8 short term, short term, short targets, and when sellers take profit, um, the reaction in the market is obviously bullish, as if buyers were jumping in because they're selling their position to buyers, etc. So the trade idea is basically this: a break of this of the previous highs, stop loss above today's highs, and taking profit around the weekly pivot or so for a 1 to 2 risk to reward ratio on this possible Brent short. This absolutely is not a trade that I am looking to turn into a swing trade at all. And it's very plausible. Let's go to the 30-minute chart. Boom. Um, it's very plausible that if this plays out, I will be taking 1R at these lows if momentum or bearish momentum dries up here, like I did yesterday on the US dollar Mexican peso. The reason is because this is a riskier trade in the sense that it's a reversal trade. So, I'm not sending this yet to the VIP group because the setup is just too immature, right? It hasn't developed just yet. And it's very plausible that we are going to see a new higher high before before the possible drop, right? And if we see a new higher high, now my entries would be higher on these levels. But you know what? That is for the VIPs and mates. If you want, I mean, if you want to be part of the VIP, just click the link below the video. It's only 35 pounds a month. What the hell is from red? It's only 35 pounds a month, and you get that position size calculator for free. So this is how that indicator works. I'm just gonna show you, yeah, the screenshot, right? And you just click right. This is how the indicator works. Hold on. Right? You drag and drop it to your MT4, and then you just put the entry level, the stop loss level, and the percentage risk of your account. In this case was 1%. I mean, I was just showing on the demo account. Really doesn't matter. I was just showing how that indicator works, and it gives you the position size that you need to take in order for you to risk 1%. And that is absolutely free for all VIPs. And if that is not worth at least 35 pounds or your subscription fee for 1 month, I don't know what you're thinking. So coming up, Olympio for non-farm payrolls, mates. He's going to go live before NFPs and during the release. Don't miss that out. And he's got some good possible trades and analysis under his bank. I don't know how you say that in English, but again, thank you for joining me. And I just wanted to, I wasn't going to go live today, but when I saw this, I thought to myself, this is a good example on how I think about reversal trades and how riskier they are and how I take them. And I thought that, it would bring value, to all of you that tune in, and I hope it did. So thank you for joining me, guys. And again, if you want to be part of the VIP team, we are currently 5,479 traders strong in that group. So if you want to be part of that team, where we share all of our VIP trades, VIP content, VIP analysis, etc., and you get that position size indicator for free. It's just 35 bucks, 35 pounds a month. And yeah, if you're not subscribed to this channel, then please subscribe. It's absolutely free to do so, and it helps us out a ton with the YouTube algorithm, right? Again, thank you for joining me. Olympio coming up for non-farm payrolls. Do not miss that out. And I will leave you with that money song.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar.